banks are controlling the entire money supply in Canada. I recently picked up this. It's a book called Fleeced, and it's a book that written by Andrew Spence, who's Torontonian, talking just about what's happening in Canada and how we are fleeced by our banks and how the lack of innovation, the lack of progress really affects Canadians and our bottom line. The history of it is fantastic. Andrew, you've done an amazing job of communicating just how bad things are for Canadians. See, we operate with the big six banks, right? They're given bank charters by the federal government, and these six banks, and only these banks, are granted those licenses. Huge capital requirements, huge restrictions, barriers to entry are massive, which is probably a good thing from a stability perspective, but absolutely stifling on growth, diversity, competition, all that. We basically have created an oligopoly, like a monopoly with a few players, these six banks. And though they're not meant to be, just colluding the riches and all that and just sharing the secrets, we complained about Loblaws and these major grocers during COVID and inflation and the whole price fixing thing. This is the same thing. I shared a screenshot on a recent post where my bank account at blah 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 bank, and I had showed how I was charged $75 for a monthly fee, a single monthly fee, and now how I generated 1 single cent in interest that month. Now, I didn't have a balance of zero, mind you. I had a balance in the thousands, 1 cent of interest compared to $75 of charges. That's nothing. Those fees account for some part of the bank's revenues, but that's not even the problem. The problem is this. A lot of the lending, a lot of the money is made from banks taking in deposits from guys like me and people like you and people like Andrew taking in deposits, and they have access to all of our money. So they're just hoarding our dollars, and they say, okay, who needs to borrow money? Now, because they have the facility, they have the ability to critique, analyze, assess applications. There's value in that from their perspective. I get that. They should be rewarded for that. But they decide to lend all our money to somebody else. What they pay us is very different than what they charge over there. It should be actually criminal what that difference is. They are not lending a single dollar of themselves. They're doing our money. So in fact, a lot of the lending is mortgages, right? Banks love lending money for mortgages. I doubt 2/3 of the funds come from our deposits. 2/3 of the money that is used to fund residential mortgages and borrowed at much higher rates than what we're lending, they're paying us 0. whatever percent, and they're lending out at 4.95, 5.35%, using their house as collateral. So tons of guarantees. 2/3 of that money lent out is from us. The other third is coming from securitized loans. So the banks take applications for mortgages, they review and assess this, perfect, they're gonna lend out all this money. Then they raise money from the outside market, they raise money, lend all this money, and they give the people that lent them the money securities. They give them security, almost like stock, towards that loan. Someone else's money entirely, again, and the banks just live there all day. The mortgage business is completely funded by outsiders, not the bank's money. All they want to do is make spreads, and they do a damn good job of that, and convincing people like you and I that the banks are the only people that can lend this money. That is false. I want you to know it's false. What has happened over the years, and thank you, Andrew, again, for mentioning this. Competition has tried to break through and sort of like get inside that inner circle and disrupt that industry. Trust companies, credit unions, international banks, and these big six banks do everything they can to make it nearly impossible for anyone else to compete with them. They squash the competition or they acquire the competition. And in so doing, you've eliminated that risk. Banks are scary places. If you believe what I'm saying is true, and I certainly do, you should be investing in banks. They're like this bulletproof machine that keeps generating money with very minimal risk. The whole risk versus return thing doesn't apply to banks. They're doing just fine managing this relationship. They're very profitable. Point is, they're too profitable, and our conservative, lazy, just stability-focused government doesn't care about the consumer, doesn't care about innovation, doesn't care about flexibility, doesn't care about funding small businesses, which are the backbone of the Canadian economy, doesn't care about homeowners who are struggling to afford their homes. They don't care. Everything is based on, I just want to talk to 6 parties at the table in the stability thing. I just want to control this group right here. Banks are controlling the entire money supply in Canada. Highly recommend getting a copy of Andrew Spence's book, Fleeced. See for yourself what's been happening so that you can avoid these traps and get wealthed up.